Future Now Show. Brought to you by the Club of Amsterdam.
Welcome to the Future Now Show. Today we talk about the crypto economy with Rohit Talwar, Kapil Gupta and Mario de Vries. You find their bios on our website. Let's start immediately. Rohit, please tell us what you can expect from today's show.
Well, Felix, firstly, thank you for inviting us to be part of this show. And what we're going to do today is really share with you some of the ideas coming out of our new book, Aftershocks and Opportunities 2, Navigating the Next Horizon. And in it, we focus quite heavily on the crypto economy. So we're going to discuss a few of those aspects today with my colleague Kapil Gupta, who wrote the chapters with me. He's a technology innovator, a passionate enthusiast around the crypto economy and a commentator on it. And then Mario de Vries, who is a software entrepreneur who's been responsible for helping to bring a number of crypto ventures to market. So we've got a diverse set of panelists. And we're going to talk through a few different aspects of the crypto economy. So let's get into it. Kapil, why don't you start us off by just telling us a little bit about what the crypto economy actually is?
Thanks, Rohit. Everyone. So I think the first thing to say with crypto economy is that it is worth $2 trillion this morning. And essentially, it is a combination of projects in technology space, in finance, in various other industries that bring the blockchain, that are built on blockchain technology. And the blockchain technologies has been around for a while, but the whole crypto economy started around 2008, 2009, after the big market crash. And the idea behind blockchain is that it's essentially a distributed ledger, and it is a ledger which only works in append-only mode. So what that means is it's distributed, and it brings in transparency in terms of all the transactions that are recorded on the database itself. Now, as everyone knows, Bitcoin was the first crypto asset that was built on blockchain and got popularized. And initially, Bitcoin was meant to be a currency, an additional currency as a distributed currency, which had very limited supply as opposed to fiat, which doesn't have any limits on its supply. And that is what made it quite popular in the early days. And since then, the blockchain or the crypto economy itself, from a tech point of view, has evolved. And right now we are in this generation 3 of the crypto assets. The first generation being Bitcoin, which was a decentralized ledger and used as a currency, which has now evolved more as a store of value. Then around 2014, we had generation 2, which was the introduction of smart contracts, which allowed the blockchain technology to be used in different functional areas. And pretty much the current evolution of crypto economy and blockchain is, I think, down to the introduction of smart contracts. And because it has allowed blockchain technology to be used in all sorts of different industries. And we'll talk more about some of the examples, like decentralized finance is one of the big evolving areas within the crypto economy. And the third generation, which is currently being developed, is a metaverse of sort, which is a combination of where multiple blockchains can interact together. And it's almost the evolution of internet. So internet becoming decentralized. And so this is where we are now headed, a universe where we will have multiple blockchains interacting with each other and people being able to move between blockchains seamlessly that is being developed. So that's what I like to call Gen 3.
Okay,
I think that's a good.
Yeah, that's a great introduction. So, I mean, what's fascinating here, I guess, is that the speed at which this has taken off. We know we're at over 300 million users today. So it's the fastest adoption of any technology in history. We know that Bitcoin is the best performing financial asset over any 10-year period in history. The expectation is that we'll get to 1 billion users by 2024, and potentially the crypto economy itself being worth $200 trillion by 2030. To put that in context, the current global equities market is around $100, $120 trillion. So it puts it in perspective as to the kind of scale of it. Let's go to you, Mario. What are some of the reasons why you think this has taken off and it's captured the imagination of these early adopters?
Well, most of all, I'm triggered by what Mr. Gupta said about the second wave being the smart contracts. And I'm really curious that in Moscow, for example, it's more than 3 years. It's possible to pay your parking ticket with a cryptocurrency that you may have earned by paying your taxes at the right time. But I'm wondering why the rest of the world, and especially Europe, is so slow in picking up these smart contracts. So the mining of crypto, and a lot of users, a lot of people investing in cryptocurrencies, but the other part, the smart contracts, to me it seems Europe is so slow. Do you see it the same way, or?
Perhaps if I start and then Kapil jump in. So I think there's a few things. One is generally, it was not understood. And like any technology, there's an initial resistance. I think if you look back at the adoption of the internet, it was exactly the same. People saying it would be for drug dealers, pornography and things. Exactly the same has happened here. At first, it was used by people for, if you like, illegal activities, but the adoption grew. And I think there's a few things happened. Because it's an unregulated market, there's still concerns about joining in. I think there's quite a conservative element from the existing system who don't want to be disrupted in financial services and government. Partly that's down to a lack of understanding. Partly that's down to a fear of losing their authority in their position. Obviously, central banks don't want money coming out of the system, going into the crypto world and earning higher interest, because it starts to damage the bond market and the savings market. And I think partly it's just people learning how to get into the technology, into the platform. It wasn't easy to invest in cryptos in the early days, or even to set up crypto ventures. That's becoming easier and easier, but there's still, particularly if you look at decentralized finance, the interfaces are still largely designed for people with tech know-how who are willing to go to Telegram or Discord channels and social media and ask questions and learn, rather than being able to go into a standard banking app and sign up. So there's a few things there that I think have been barriers, but now that the rapid adoption is coming. And the other thing I'd add before handing over to Kapil is that smart contracts are not well understood. This idea of having an automated contract that basically executes whatever needs to happen when the one party has fulfilled its obligation, the other party pays up. So you put your money into a savings product that only lasts 3 weeks. Automatically, at the end of that 3 weeks, your money and the interest are transferred back to you with no human involvement. And I think that's quite hard for people to get their heads around. But I think it's a fascinating and exciting development. Kapil, is there anything you want to add about why there's been a sort of slower take-up or some resistance around the world?
I don't know about the world. I think in the UK, my experience is that UK itself is slow at adopting, especially cutting edge technology. In my experience of working in tech for over like 20 years, I've noticed that UK organizations adopt technology when it's safe, generally speaking. So I think that, and I'm assuming some of the other countries, if not all, some of the other European countries have similar way of looking at things from a tech point of view, if nothing else. So that I feel is one of the key reasons. So the approach is more conservative, just purely from a risky technology point of view. That's the only thing I would like to add.
So on the one hand, you emphasize safe technology. On the other hand, we are discussing disruptive technology and disruptive business models in respect to the economy. In your book, you specifically mentioned the rug pull. Can you elaborate a little bit on that aspect in respect to safe technology and business models?
Well, this is fascinating because, as Kapil said, on the one hand, you have this super secure underlying platform where you can't go in and change a transaction once it's been recorded. You can only add information. So at one level, it's incredibly secure because each transaction is recorded in multiple places as well in this distributed ledger. It's impossible for someone to go and change the details of a transaction. But because it's an unregulated market, because you don't have to be licensed to trade in this market, and because there's no security for investors, it is still a bit of a Wild West. And so what can happen is that anyone can create a venture, and they don't actually have to have built the software yet. They can just launch it and take in people's funds to issue tokens to them. And two things happen. One is the rug pull, where basically they get everyone's money and then they just disappear. And then the other version is where they might actually build something, but what the originators and their friends do is they pump the price up and encourage other retail investors to come in. They create a lot of hype around their business. People jump in, the price shoots up, and then they sell at those founders sell at a peak, and suddenly the price crashes because they're selling, and everyone else gets burnt. So there are all those things, but they didn't create these things, these ideas. These came from traditional financial markets. They just took them into the crypto world. So I think maybe this is a good point to actually dive a little bit deeper into explaining what we mean by crypto assets. And I'll just do a very quick overview. So there are different categories. The first is, as Kapil said, the trading currencies, the mediums of exchange. And that was what Bitcoin was originally intended to do. And there are others like that, like Litecoin, Ripple XRP, and there are others coming through which can be used as trading currencies. Indeed, El Salvador has adopted Bitcoin as legal tender as a trading currency, but it's also become a store of value. People are calling it digital gold, digital real estate, because there is a fixed supply. And in the same way, people place value on certain things in society, whether it's diamonds or gold. We choose the assets that we're going to keep treat as our stores of value. The view is that we can do exactly the same in the digital world. And I think it was Bank of America did this report on Bitcoin and said, why is its value going up? And the conclusion of a 100-page report was that the value of Bitcoin is going up because the value of Bitcoin is going up. So, because people see it as that. Then there are the other big category today are the platform tokens. So people who are buying goods and services. So a good example is VeChain. It's a supply chain management platform, and you buy VeChain tokens and you can use those to pay for services from that application. And then the final category, which is starting to emerge right now, are these central bank digital currencies. So where a country issues its own currency and has trading in it, and it's tied to its base currency. Right now, China has a 20 million user trial of its digital yuan. Ghana is just starting a trial, and a lot of countries are looking at this. And what many are going to go do is adopt this other category that exists called stablecoins. So these, again, are coins that have been created that are tied mainly to the dollar, like USDT, USDC, BUSD. There's a number of them. And the point with these is, the reason people buy these is that they then exist in the crypto universe. You don't have to take money in and out into your fiat currency like the dollar or the euro. You can just trade within the crypto ecosystem. You can buy other coins, you can sell other coins, and just hold your money in those stable coins. And then you can put those into savings accounts, i.e. you can put them into various investment pools, and you can earn sometimes up to 10% interest on them. So it makes sense for people to hold them. So those are the main asset classes. Again, let me open it up to you guys to kind of share your thoughts on why these things are becoming so important. Why is it these asset classes are becoming interesting? Mario, maybe start with you.
Thank you. Yes, you specifically display crypto as digital gold. In the old economy, printed money was balanced by the gold supply of governments. But in the book, you say that printed money has an unlimited supply, and I didn't quite get that. Because there is some kind of effect on inflation, I guess. So I'm wondering, how should we balance the value of crypto? You can connect it to the dollar, as you mentioned, but are there other ways? And what about this unlimited supply? What will it do with inflation?
Kapil, do you want to come in on that?
I think you're probably more suited for this one, right?
Okay, so the thing about fiat currencies like the dollar and the pound is that they literally have an unlimited supply. So we've seen in the great financial crisis, we created this term called quantitative easing. And what it basically meant was printing money. So the way that governments got out of that, this latest crisis with the pandemic, is that the countries that could afford to or were considered safe enough just printed more and more money. They borrowed more and more money that didn't exist. They just printed. There's no limit on the supply of the dollar because it's no longer tied to the amount of gold it had. That used to be called the gold standard. And so that's considered inflationary. When you pump more and more money in, it gets spent, and it basically drives up the price of everything because there's more money chasing a relatively limited supply of goods and services. So that's considered inflationary, whereas the cryptocurrencies that have a fixed supply, like Bitcoin, are effectively deflationary. They have an impact of driving prices down. Like most technologies are deflationary because they drive down the cost over time. And so, for example, I think it's 50% of all the US dollars in existence have been printed in the last 3 years. Most of it obviously is digital, it's not physical. And so that creates more volatility. And one of the drivers behind Bitcoin in particular was to create more stability, was to level the playing field for everyone so that there was a control over the currency, and it wasn't under political control. It was a much more democratic model. Kapil, do you want to say a little bit more about why you see these, if you like, or what you see going on in terms of crypto assets and the kind of evolution of that market?
Yeah, I think the way I look at it is there's like Puritans who really look at Bitcoin as the only crypto asset, right? Like there's a class of technologists, investors who don't even look at smart contracts or anything else and consider that as crypto assets. So there's that class of people. And then I think there's one of the big reasons why I see a lot of people jumping into crypto economy and crypto assets is this emergence of decentralized finance, especially the retail customer over the last year or so has jumped in to crypto is because, and this is just a very crude example, if I put my money in my savings account right now, I'm getting 0.01, 0.02% return. It's not even matching the inflation. And in decentralized finance, if I utilize some of the things, I can easily convert my funds into stable coin, which is pegged by US dollar, and earn anywhere between 8 to 10 minimum APY, and in some cases, even up to 100% return every year. So I think that the decentralized nature of it has it be that the value is coming back to people who are holding the tokens, who are part of the projects themselves. I think that has drawn a huge amount of people into crypto. And then I think the next part is the technology itself. So I think so far what we've looked at, talked about crypto assets in terms of like investment, etc. But I think technology is the other part. And Mario was talking about rug pull earlier. I feel that the rug pull is usually I've seen in a particular class of projects that we call meme coins. Which is they don't have any function behind it other than just like, let's invest this money in, and everyone who invests gets part of the return because there's a tax on every transaction. So there's that class of tokens that were developed only for that reason, and I think that's where we've seen most of the rug pulls. And increasingly so, we are seeing that in NFT space as well, where people are creating NFT tokens, big projects, and if they don't have any function behind it, recently we've seen some of the rug pulls there. However, there's a majority of the projects have some kind of real life function behind it. Okay. And I haven't seen rug pulls or scams in that. And I think that is the other big area where we see utility in terms of decentralization. So for example, some of the projects, there's a project called AOZ, AIOZ, which is all about decentralized media. So it is there to disrupt the media, centralized media organizations like YouTube. And also go against censorship in some cases as well. Then there's a new organization, and these are just some of the picks that I'm taking to look at how disruptive this technology can be. So one of the new projects that is launching recently is called Opulus, which is linked to music industry, where an upcoming artist can create their music into a non-fungible token. And I, as a user, can invest in that non-fungible token. And then if that song or that album becomes really popular, anytime that song is played anywhere, I get part of the royalties back. Mm-hmm. So in that way, I think there's a big space where the places where centralized organizations or authorities had a lot of power, that is being distributed. And I think that, I feel, is the revolutionary aspect of crypto economy and crypto asset that really excites me personally.
Some great examples of crypto applications there. And I think we are seeing this sort of split into services, the platforms like Ethereum and Solana that enable people to build smart contracts and DeFi and other things. And then the actual, the kind of new services, taking what we did in traditional internet environments like social media, like content sharing, and doing it in a decentralized way. I'd be interested to hear from you, Mario. You brought some crypto ventures to market. Do you want to just say a little bit about the kinds of applications that those ventures were serving?
Well, the nicest one I have to say is a venture that started in Switzerland but now relocated to Russia, and it's actually smart contracts on art. I know in the book you especially mention art as one of the future investments, so it really is a decentralized financing way for art. So it really fits in the explanation that Mr. Gupta just did. In the book, you also give some warnings for manipulation in crypto, and I think it's maybe also one of the reasons for the slow pickup in Europe. I understand asset theft, but what about private ledgers? Isn't that a good way to prevent manipulation in crypto, or do you see other threats for manipulation?
Well, I think we have to accept that in any market, there's huge manipulation. We've seen the gold price, the silver price being massively manipulated, the stock market massively manipulated by people who have large amounts of money. And exactly the same has happened in crypto, but because it's smaller, it's easier to manipulate. So we had quite a big price crash in May. And what happened was that you saw that there was a number of people who created crypto wallets where you hold your currency. They put large amounts in between 1 week and 1 month before the crash. And then they all sold heavily. And that was because the price of Bitcoin had got to 64,000 or so. And the big institutions and the big investors didn't want to pay that much to get in. They drove the price down to about 28,000. And then you saw a massive accumulation happening. And now you see kind of mini manipulations back on the way up. Private ledgers are great. And a lot of companies have tried to create private ledgers where it's a closed system, unlike the blockchain, which is open, the public blockchain. They've tried to create these private ledgers where it's just a closed community that can trade and do their work. Now that's fine, but what that would be is taking the Bitcoin or other cryptos off the open markets and putting it into these closed trading systems. So you know all the players within there, and then you can put insurance and guarantees in, but then it mirrors the price in the public markets, but it locks out most people. It's a kind of closed game. But that's an interesting part of the future. Maybe we can start to move on and talk about the future. So a few things that we see happening here. One is there will be this accelerated adoption of cryptocurrencies as legal tender. Ukraine, Paraguay, Argentina, Mexico are all looking at doing that. But also the creation of these central bank digital currencies. And I think there's 3 models there. One is people will create their own. Probably we'll see a digital dollar, a digital pound, a digital euro. We already have the digital yuan. Secondly, we'll see countries adopting one of those as their central bank digital currency. So you could easily see a lot of China's partners around its One Belt, One Road project, or its Belt and Road project, up to 150 countries involved. You could see China encouraging them to use the digital yuan for trading between those countries. And then thirdly, you might see people just going straight to adopting an existing stable coin and saying, we will use USDT or whatever as our currency. So that's one big trend. For me, the second, I'm going to let Kapil talk more about this, is the non-fungible tokens piece, where we can basically take things and lock them into these so-called NFTs so they can't be changed. So I could put an education certificate in there, I could put the deeds to a house, and then you know that can't be edited or altered. And then collectibles, so our baseball cards, comic magazines and things, we can create digital versions of those collectibles, and that's what we're talking about. The other big one, I think, is this idea of community tokens. So you're seeing artists launch their own tokens for people to buy their products and concert tickets. But you're also seeing a lot of big brands saying, hang on, we could launch our own tokens. So as Disney, I could lock all my customers in by having them buy products from us, creating secondary markets in the things they bought, but all using the Disney token. So it would appreciate in value. I could reward you in Disney tokens, and I could start to build other services in, because then I've got a community of like a billion customers. Then I can start to have other people come in and offer you travel, offer you credit cards at a much cheaper rate. I can create an internal market, and eventually, well, we're seeing some big brands already being born in crypto. So now you've got Bitcoin on a good day being worth $1 trillion. You've got Ethereum worth about 40% of that, Cardano worth, maybe 200 billion. So these are big corporations now, which are trading entirely in crypto. And so what you could see is existing businesses eventually convert their equity into crypto over time. So my share can actually be used to buy goods and services from you, which it can't today. I have to use normal money. My share is one asset. My normal money is another. And then the final one is that crypto has really introduced this idea of fractionalization. So I can buy Bitcoin down to 18 decimal places. The smallest unit of Bitcoin is called a Satoshi. And I don't know what that is, but if you put, 17 zeros and then a number at the end, that's the tiniest fraction. So if we take that into the real world or the physical world, we can start to introduce the idea of fractionalization and tokenization of everything. So imagine I have a house, and let's say my house is worth 1 million euros. Well, I could break that down into tokens, 100 million tokens worth 1 cent each. And I could buy a portion of the house. I could take a mortgage on a portion of the house. And then I could sell maybe 50% of the house, or have the finance institution could let anyone buy that 50%, those tokens. So when I go to buy my coffee and I pay €2.75, I could have that topped up to €3, and those extra 25 cents could be used to buy tokens in a house. And then I can sell those tokens whenever I want. I don't have to wait for the owner to sell their house. Now, you can't do that with humans involved in the process. You have to use these entirely digital platforms, which you're seeing a lot of in the crypto sphere. They're called decentralized autonomous organizations, but they run entirely in software. And so you have almost zero transaction costs. So then you can do this. And then you start to say, well, building public infrastructure, maybe we can do that. Miami has already launched its own coin where part of the fees to the miners who validate the coins, part of that goes to the city to pay for infrastructure. They raised in the first week of launch, they raised $1 million for the city's finances. So we're seeing some really interesting examples there of where it could go next. I don't know whether you guys want to come in, Mario. What are your thoughts on where this could go next, given that we're such an early point of adoption?
Well, I wasn't able to get my head around it yet, but in the book you say some things about ethical standards in science and technology, and I think we really need those ethical standards. But what is your take on that? The ethical standards in science and technology.
Phil, do you want to take this, or shall I?
You go ahead.
Okay, so I mean, this is across all the fields of science and technology. There's been this thing of, do we kind of proceed on the basis of precaution that says we only do things if they're ethical, they're viable, or do we allow science to run riot and then try and bring ethical standards into how we adopt it? And there's such a different approach to science all around the world. It's very hard to create these common standards anymore. So I think it's going to get harder. Now, one of the things is AI might come in and be used to regulate and validate what we bring to market. In crypto, there are obviously some base standards in terms of the platforms on which this runs. But in terms of the kinds of applications people build, there's no control over that. There's no control over the developers in terms of the way they might use data. And I mean that in any market. We're trying to do some things with GDPR and other data standards. Now, crypto might actually help with that, because we're already seeing ventures that say, okay, we'll hold your data in a secure way. You give people access permissions to say which bits of your data can you hold. So, for example, no retailer ever needs to know who I am. Why do I need to give them that information? They just need a secure token to say, yes, I'm a legal person and here's my money. And if it's a digital service, they don't need to know who I am. If it's a physical service, then they might have a delivery address, or they might not. They might have a token that they give to a distributing company. The distribution company then delivers to me. But there's firewalls in there. So we could start to use technology to kind of enforce ethics and controls. Kapil, what's your sense on some of the other areas where we might see this evolving to in the future, this crypto space, because we're so early in the game?
Yeah, I think, I mean, I love all of the things that you said. A couple of things I'm seeing and I'm excited by it. So you touched upon decentralized autonomous organizations. And one of the things I really like about this space is that everything I do has value in the crypto space. And here's an example. So let's look at the art market. There's this person called Beeple who sold his collection of his art for $69 million. And now in New York in November, they are organizing an exhibition for all the people who hold his art in digital art. And even the ticket for that event is a non-fungible token. It's a collectible item. And when you buy the ticket, it is presented to you in a certain way. And once you've used the ticket, it changes colors and it changes some properties and becomes different. And both those states can then become collectibles. And they have intrinsic value. So, and that's fascinating for me because in some ways, nothing is going to waste. Everything has value and someone is willing to trade off that value. That I love about that thing. And I think part of the decentralized autonomous organization, the DAO, what I find really exciting and where this could go is looking at some of the, dare I say, government functions, where at the moment there's a lot of decision making is very centralized. Now, if it is a community-driven system in a decentralized autonomous organization, I think a lot of the bottlenecks that we see in decision making in distant future could go down to the community level, and the community making decisions about how they run their community. To a point where I think, let's say, our voting system could completely be on blockchain, and there's never an issue with fraudulent votes, for example, right? Similarly, like let's look at land registry as this could be blasphemy when it comes to talking about centralized organizations. But if entire land registry records are on blockchain and everything is done by a smart contract, it could all be pretty simple, like you don't need a centralized system to just maintain records, for example. So I think some of those things are really exciting for me. And the final piece that I really think is going to blow people's mind in future is, I think there's this concept. I'm not sure if you guys have seen the movie Ready Player One. In that sense, especially in the context of over the last 2 years, we've been spending a lot of time at home, working from home, and spending a lot of time in the virtual world. And I think we are at a place in technological advancements and also everything that's happening in blockchain and NFT and stuff, that we're building these metaverses. And ultimately, all of these metaverses could come together, and within utilizing the VR and the AR technology, we could be going to office in a virtual world. And you have your office in a virtual world where you have your meetings and you have an avatar, and the art that you bought on the market is displayed in the foyer or in your meeting rooms. And in some ways, people could look at it as, oh my God, we're going away from real life. And at the same time, I find it really interesting that some of the limits that we've had from a tech point of view and from our imagination point of view, we are at that point that all of those things can almost go away. So those are some of the exciting things that I am looking forward to, in addition to what you said, right?
In respect to DAOs, where the governance is done by the community, in the book you mention insurances and agriculture. You are giving some examples now. Are there more industries that are lined up to jump in next?
Well, and that's fascinating. That right now, the story over the last 5 years has been a lot of people in business in particular and government saying, well, we can't really see any valid application for blockchain technology. And largely because ultimately that's because they're not that bothered about security. They get their systems get hacked, the data can get hacked, you can't track things, but somehow they've not been that bothered. But when you have an ultimately unhackable system, then the question becomes, what wouldn't you put onto the blockchain? Tracking shipping, tracking education qualifications, everything suddenly becomes available. And so you're seeing in every area of the market, every area of society, people saying, let's put this onto the blockchain. And we've had such a fascinating conversation here. I know we could go on and on, but Felix would basically
have to round up, yeah.
Take out a hit on my life if I let this carry on too long. So, and he could do that now via blockchain and no one would know he'd done it. So thank you all. It's been a great conversation. Felix, thank you so much for hosting us. Kapil, thank you for sharing your thoughts. Mario, thank you for sharing your thoughts, your provocations. As has been mentioned a few times, a lot of the ideas we've discussed are in the chapters of this book, Aftershocks and Opportunities 2. It draws together the ideas of 37 future thinkers from around the world in 42 chapters, exploring how our world could play out over the next 10 years, looking at the shocks, the shifts, the risks, and the opportunities that could emerge in a post-pandemic future. You can find it on our website, fastfuture.com, and on Amazon and across the web. Thank you very much for listening into this podcast.
Thank you. Yes.
Thank you.
Thank you.